Hello and thanks for joining me. It is Tuesday, November the 1st, and you're looking at 4 panels here. In the left-hand column is the ES, December contract. Right-hand column, SPY on the top, and the Qs on the bottom. What I thought I'd do in this video is just talk a little bit about today's price action and also some levels that I have drawn in on the charts. Something that I forgot to mention in the previous video was the fair value gap that formed here. That was at the start of the move down that led to new lows for the year, and it had been in place for some time, more than 20 trading days. And wow, talk about a place to get out of your long position on that Friday squeeze. There's a lot of credibility to these levels, and I'm thankful to ICT for bringing these little nuances in price action to light. And I'm confident enough to where I can risk money against these levels. So I was up early this morning just watching the first part of the London session, and it was grinding higher into a new high. We took out the previous high by about 4 points. So if that was a sweep of liquidity, it was a pretty short one. And then just a huge dump in the morning, right down into the fair value gap that formed, one of the fair value gaps that formed on the Friday squeeze. So I'm just going to blow this chart up here a little bit so you can see what's going on. This gap right here formed on the Friday squeeze. So we traded right into it, but we didn't trade through it. Looking at the candle, you would think there would have been more momentum to the downside, but we kind of hit the brakes and formed that swing low just in front of the 38.50 level. I think it's right around 32.50. So the 38.50 level is significant to me. If we start to trade below that with any type of momentum, fair value gaps forming on the downside, I'd consider that to be pretty bearish. Another unusual thing that I haven't noted before is, so you have the gap here and then you have this gap below. Well, the gap that formed within this candle is basically bounded by the two gaps that were already in place. So rather than draw that in, I'm just making a mental note that it's a gap within a gap, for a lack of a better way to explain it. And a couple things I also noticed as far as the charts. SPY today was right up against a level of support and resistance. So there's no ICT wizardry here. This is just a level of support and resistance that I've drawn in, and SPY was right up against that. Clearly today it was rejected off that level, and at the same time QQQ was at a level, the lower part of a fair value gap that forms on the weekly. So we had both indices up against strong areas of resistance, if you want to refer to it as that. Also want to point out that the Qs, that's the 50-day moving average for the Qs, kind of sweeping down into this gap that is formed. Clearly rejected. And again, I'm just staying neutral. I don't know how dovish Powell's speak could be to propel us higher. I don't know if it even matters what he says. We're going to propel higher anyway, but we're at some pretty significant levels here, and I just thought it was worth mentioning and pointing them out. Just thought I would do a quick video reviewing these charts, and I'll tell you something that I got out of doing this video, and something that I have been getting out of doing these videos, is when I'm looking at them now, it's helping my analysis, because I'm thinking about how I would explain this. In other words, when I'm kind of going through thinking about what I'm going to say, if I'm going to record this and do a video, that dialogue that's going on in my head is actually helping out my analysis, because I'm starting to notice more nuances and try to come up with explanations for why things are the way they are. So start your own YouTube channel and just put the videos up there. If nothing else, it's going to help your analysis. So I hope this has been useful to you, and thank you for your time and attention. Have a good evening and good luck trading the FOMC tomorrow.